Oliver, the relationship between the commercial property market and interest rates is always a tricky one. Now, we heard the Governor of the Bank of England this morning talking about the economy generally and giving a fairly upbeat assessment of things, which suggests that UK interest rates at least may be heading for a rise at some point, which will obviously make life more difficult in the commercial property market. What exactly is that relationship and how does it work?
Well, it depends who you ask. The commercial property companies themselves will say rising interest rates are no problem at all. They are a sign that the economy is healthy, and if the economy is healthy, there's lots of demand for commercial property, lots of people want to rent it, lots of people want to own it, all is good. On the other hand, rising interest rates can put pressure on property values, which of course hurts their portfolio valuations, and it also gives them rising interest bills on the debt that they all take out to pay for the property. So not an altogether positive impact for the property companies. And we've seen share prices today in the likes of British Land fall because of this.
Now, British Land and Land Securities have both reported in the last couple of days. So how are they doing in this environment?
They're doing pretty well at the moment. Net asset value at both is up by around 4%, slightly more at British Land, slightly less at Land Securities. And they're really reshaping their portfolios. At British Land, who we heard from today, it's been a question of shifting both the office and retail portfolio. It's been selling some of its secondary retail properties, the less good locations, and investing more in more attractive ones. And in offices, it's all about London in particular, particularly the West End of London. British Land is known for the Cheese Grater building. That's one of its buildings in the city. But a lot of the money at the moment is going into the West End because it sees much better potential for prices there.
Right, and would that continue even if interest rates were to go up?
Yeah, they're quite bullish about the West End. They raised money for replacing earlier this year and spent a lot of that on a big development in Paddington. And today they've announced about £1.1 billion worth of developments on various properties across London. They're quite bullish for the London economy, and that's really the focus of where they're investing. And even if interest rates tick up, it's hard to see London having a very big problem.
Right. Well, we'll see, I guess, in the next few months and years whether the London property market, the London commercial property market, is immune to rising interest rates. It's certainly very buoyant at the moment. Thanks, Oliver.